Ladies and gentlemen, welcome back to the channel. I have an exciting video for all of you because I think the stock market is almost done selling off. I think a reversal to the upside is coming soon. Now. You're going to say, oh my gosh, the S&P is only down 2% from all-time highs. That's true. But you have to understand what's actually happening in markets recently to understand this. The high flyers, the momentum, the areas that, have been pushing higher, outpacing the headline S&P, those are the areas that have come down quite a bit recently. Okay? In fact, look at this. Okay? When you take a look at the CNN Fear and Greed Index, for an example, this thing is at 26. It is 1 point lower from going into extreme fear. Okay? Market momentum is fear. Stock price strength is neutral. Stock price breadth, extreme fear. Important to point out here, extreme fear and breadth. Put and call options, neutral. Market volatility, extreme fear. Safe haven demand in extreme fear. And junk bond demand in extreme fear. The AI Investor Sentiment Survey shows bears completely in control of this market. Bullish investors at 33.7%. Neutral investors at 20.3%. Bearish investors at 46.1%. Why do I point this out? Because people are bearish. Sentiment is bearish. Now, what has been happening in markets the last couple of days? You've seen this risk-off narrative really start to come out in some of even the stocks that we really like that are completely undervalued. Resolve, the stock's trading at 3 times sales. For an AI company, pure AI play with big crypto plans long term, but pure AI agentic commerce play, trading at 3 times sales, growing at hundreds of percent, okay? That's planning on growing like 300% next year. Stocks trading at 3 times price to sales. Poet, emerging technology for data centers, right? Integrating optics, photonics, into chips to solve the energy efficiency problem with data centers, okay? CES AI, down 11% today. This is actually one I've not talked about on the channel. I'm up quite a bit on it. I've been waiting for a pullback, but essentially a battery maker, okay, with a software platform going live October 20th. They already have 2 commercial customers that have been trying this that are paying for this, okay? Emerging companies, I feel quality companies, specifically with Resolve, Poet, CES, maybe a little bit more on the speculative side. But Resolve, Poet, some of the ones that we've been buying just getting crushed for no reason. Resolve down 8%, Poet down 6.5% today when they don't deserve it. So what is happening? Why are these stocks getting destroyed and the S&P is not? Okay, well, most hedge funds and institutions operate under the framework of risk management. Okay, they're trying to make sure they don't blow up their portfolios for their clients. Okay, so what happens when risk goes up? These are the first stocks, quality or not, that get sold. Smaller companies that have large gains in the past, 90 days. Companies, really just small caps, right? Those are the companies that get indiscriminately sold because risk is going higher. Recession risk is going higher. Decoupling risk from China creates all kinds of potential problems. Okay, so these are the stocks that get sold, not because a firm necessarily wants to sell them, but because that's how their risk management framework is designed. Okay, when in all reality, they should just hold those stocks and buy them if they go lower. But that's not what happens. Because what if we had another 08 style great recession depression. Some of those companies are going to get completely wiped out. You'd rather sell the smaller companies and hold on to the Metas, Amazons, Oracles, Teslas, Nvidias of the world, right? They might go down, but they're gonna hold up better, right? So from a risk management perspective, institutions have been selling the internals of our markets. That's why I point out the CNN Fear and Greed Index. That's why I bring up the AI Investor Sentiment Survey, because internally in this market, you're pretty washed out. You're starting to get pretty washed out, I should say. People are starting to get pretty fearful. Bears are in control of this market, blah, blah, blah. As a contrarian indicator, when the CNN Fear and Greed Index is in fear territory or extreme fear, you want to be a buyer of this market. Same is true when the AI Investor Sentiment Survey shows more bears than bulls. Contrarianly, that says we're probably going to have a reversal soon. You know what areas are going to reverse the hardest? The stocks that are selling off the hardest today and yesterday or the day before that, right? The stocks that you and I probably own, okay? So that's kind of what's happening in the markets, the internal aspect of it. But why do I think a flip-flop or reversal is coming? Well, it's simple. My expectation for 2026, inflation's going to come down. We're going to get Fed cuts. Housing market picks up. People are able to sell their homes. They're going to take hundreds of thousands of dollars to their bank account, be able to buy new homes, refurnish those, blah, blah, blah. Okay. Big, beautiful bill. No tax on tips, no tax on overtime. Being able to write off auto loan interest and some other provisions in that bill are very economically stimulative. Okay. Goldman Sachs even said today that business confidence around the economy starting to improve. Okay. So my economic backdrop for 2026 is strong. That's my expectation. Okay. I also think that AI is alive and well and will continue to be alive and well. TSMC just reported earnings today, smashing expectations. Awesome. Validates my thesis, if that needed any validating. But I think most people probably agree with that. I think most of Wall Street probably agrees with what I just said. Step by step, I don't think there would be too many arguments against that. Some obviously would, but who cares about them? Largely, that is correct. Okay, in my opinion. Again, I'm not a financial advisor. I'm not a financial planner. Come to your own conclusions, blah, blah, blah. You get it. But why do I think stocks are about to reverse or flip-flop? Because I think Trump's about to flip-flop. Kind of. Trump, you gotta understand this. Trump does not want a bear market. He does not want the stock market to fall. He does not want a recession. Okay? At the core of it, that is not in his best interest. Okay? For what he's trying to accomplish. What I think he's trying to accomplish is create a stronger economy, consumers to do better, to win the AI race. Recession doesn't accomplish any of those things. Okay? Now, China came out today and said they want to talk. They want to settle this rare earths situation. Okay? Well, Trump said 2 days ago, 3 days ago, don't worry about China. That's about the equivalent of buy stocks. That's what Trump said back in April. So I think naturally we're getting to the point where both countries, the U.S. and China, are going to start talking. As we talked about back in April, the moment when things start to look better, the markets will respond. The markets will start to extrapolate that and say, things are looking better now, they're going to get better, let's buy markets, right? That's why we got so bullish so fast back in April. Because when Trump said to buy stocks, and there was a pause rumor that tariffs were coming, and markets went up like 5% in 10 minutes. It was something crazy. Like, that was the moment where Wall Street said, okay, problem solved. I think the moment where Wall Street says, okay, problem solved, is coming relatively soon. within the coming days. Now, we also have a government shutdown issue, and we're not getting economic data as much, but the Fed basically has told us not a lot has changed. Like, they still see the same kind of market environment. The path for rate cuts is really unchanged since the government has been shut down. Now, if the government can reopen, that could be good, but we're forecasting like a 40-day government shutdown. It doesn't look like that's going to end anytime soon. That is causing a certain degree of pressure on markets as well, but I think it's mainly the China situation at this point, okay? And I see that getting better in the coming days. Now, if you guys would like to come trade with us every time we make trades or identify opportunities or hedge or sell, you get the idea. I send out alerts. I let you guys know exactly what I'm doing, okay? This portfolio year to date is up 153%, okay? Even with some of the recent volatility we've had or seen year to date. We were up 220% at the peak on October 8th, about 8 days ago. Obviously, you've come down a bit since then. But still, nonetheless, pretty impressive. So, if you guys want to come trade with us, check that link out down below in the description of today's episode. And if you guys want to come join Public, the trading platform that we are using, it's honestly my favorite. It's a fantastic platform. Check that link out down below. If you sign up and deposit $1,000 or more, you get $100 in stock of your choice. Can't really beat that. So check that link out down below as well. Now, for tomorrow, we get a speech from Fed Musa Liam at 12:15 p.m., so around noon, lunchtime. You get the net long-term TIC flows, foreign bond investment, overall net capital flows. None of this is really going to be important. We're not getting export prices month over month, year over year, export prices month over month, year over year, or building permits or housing starts. So because the government is shut down, we're still not going to be getting some relatively important economic data. Now, today we did have TSMC earnings, which came in much better than expected. You did have some banks as well in pre-market today. In after hours today, you have Interactive Brokers, CSX, First National Bank, and some other banks. And then tomorrow morning, you have Ally, SLB. Boy, I'm tired. State Street, American Express, Fifth Third Bank, the Regions, Truist, Huntington, Comerica. American Express could be a little bit more important this time around because the government is shut down. How are consumers doing? Are they still spending? Are they slowing down? Some of those questions, that Wall Street have may be answered soon. And honestly, I could see some, positive developments from a broader market perspective if American Express does tell us good things. Now, despite all of that, another reason I think the markets are about to flip-flop and get bullish again is because of just how well markets have held up despite the trade tensions, okay? This is not our first rodeo. This is actually our third rodeo. The first rodeo, trade war between the U.S. and China, took place back in 2018, and markets fell 20% when that happened. Right here, bottomed on, I think it was Christmas Eve. Yeah, December 24th, markets bottomed. The day after Christmas, the markets were up 5%. What a Christmas present, okay? That was the first rodeo. The second rodeo was back in April, and that was really like a trade war on the world, not just China. China was a big part of that, and a big reason why stocks sold off. Things just got worse with China after that progressively, so that was not great. But now this is rodeo number 3. Now, difference, again, this is not a trade war with the world. This is a trade war with China, so that's good. There's some differences here, but, long story short, It's not as bad as back in April. But you really haven't come down all that much. Now, alternatively, it's not fair to say that because, even though the S&P is only down less than 2% from all-time highs, internally in our markets, some of our favorite stocks in the trading community, some of your favorite stocks have sold off dramatically, right? They're down like 30% from some of their levels they were just at 2 weeks ago, right? Why? Because Wall Street knows exactly what I've been telling you to be true, that this could cause a recession. This could cause weakening in the economy. This could be bad, having a trade embargo with China, but it may not, right? So what do institutions do? Well, when in doubt, you sell the stocks you don't want to hold if a recession comes about. You sell the stocks that are going to go down the most if stocks fall. So simply, like most firms, a lot of firms, they don't even have a say in this. A lot of firms are literally pre-programmed or have clauses where if volatility goes up, if risk goes up, they have to sell the riskiest stocks in their portfolio. Now, that's partially why Wall Street underperforms, but it's a risk management thing, okay? If we were to have an '08 crisis, you wouldn't want to hold a bunch of junk, right? But alternatively, if you are doing like what we're doing, taking these high risk, high reward, quality companies under your wing in your portfolio, if you will, those are not the companies you want to sell, when things get bad. Those are the companies you want to buy for the upside that prevails from coming out of this situation, right? So you can't blame Wall Street for selling the high flyers, the emerging technologies when they are categorized as the riskiest kind of stocks. People are not really jumping to sell Apple or Microsoft or Tesla or Nvidia or some of these well-known established companies. But they're not paying a second thought to selling the other ones, right? The internals of our markets. And that's why you're only down 2% from highs, but the CNN Fear and Greed Index is nearly in extreme fear. That's what it's about, right? That's why. Because internally, markets don't look great. Okay? Internally, there's been quite a bit of pain. Kind of like 2022. 2022 is a great example of this. Yes, indexes fell 20+% at the drawdown. But, under the surface, a lot of stocks were down 60 to 90%. A lot of those were quality companies and ended up coming back, right? Some of them were not. Some of them have never come back, okay? But it's just what happens when you have a higher risk environment. Wall Street, either knowingly or willingly, or maybe it's programmed, right? Into the fund, when volatility goes up, they sell, the high flyers, the new emerging technologies, the less established companies, the small caps, if you will. It's not their fault. That's just how they have to operate. But if you are advantageous and you do not fear a little bit of downside and you have a longer term perspective, I think a lot of stocks right now do and are starting to look very attractive. Okay? That is why we are starting to do more and more buying as those areas are selling off. But yeah, I see a flip-flop. I see a reversal coming. It's just really a matter of time. It could happen today. It could happen into tomorrow. Could happen in this upcoming week. But I do think within days, you're going to see Trump try to cancel this trade war with China, come to some kind of agreement. The art of the deal, right? Create chaos, create uncertainty, get a little bit of leveraging power. So, yeah, I think that's coming soon. Let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Again, check out that link down below in the description of this video to come join the trading community. With that said, have a great rest of your day, and I will see you in the next one.